Hello, everyone, and welcome to today's webinar, Growing Your Wealth with Agriculture Investments, presented by Austin Manis, Chief Operating Officer from Harvest Returns. My name is Amanda Maroney, and I'm the Education Manager for RLI, and I'll be your host for today. The Realtors Land Institute, the Voice of Land, continually strives to maintain its status as the acknowledged leader for all matters pertaining to the land real estate profession. RLI endeavors to remain the essential membership organization for the extraordinary real estate professionals who broker, lease, sell, develop, and manage our most precious resource, the land. We're here to provide our members the expertise, camaraderie, and resources that are the foundation for all land real estate professionals to become the best in the business. While this webinar does not count as credit towards RLI's Elite Accredited Land Consultant ALC designation, it is filled with valuable expertise. So let's get started for today. Today's webinar will focus on agricultural production is one of the oldest, most profitable investments available. With each passing year, the world must feed more people with less arable land. Global demographics will continue those trends as the Earth's population grows by another 3 billion people in the next few decades. In a time of financial uncertainty, there's no better asset to own than income-producing farm, timber, ranch land. These investments provide tangible yields derived from naturally produced products and have beaten the returns from other asset classes for years. Today, we'll learn about why an investment in agriculture matters for the future, the different types of agriculture investments, and how you can invest in private ag investments with crowdfunding. First, I do want to mention that we would love to hear from you all during today's presentation. So I would like to mention that after Austin's presentation, we will have some time for Q&A. So please feel free throughout the presentation to type your questions in the Q&A box. The Q&A box is located towards the bottom of your screen. There should be a little bubble icon where you can click on and be able to type in your question, and we will be able to answer them at the end of today's presentation. With that being said, I'm pleased to introduce Austin Manis as our presenter for today. As Harvest Returns Chief Operating Officer, Austin manages all facets of the company's logistics, deal pipeline, and human resources. Some of Austin's greatest memories were spent summers as a kid working with his grandparents on their small farm. During a 10-year career as a U.S. Army officer, he served at several levels of command from tactical to strategic operations. While deployed to Iraq and Afghanistan, Austin conducted countless combat operations as well as cultivated relationships with local governing officials in support of mission objectives. He managed a $65 million non-lethal support program in southern Turkey for the U.S. Department of State in support of the moderate Syrian armed opposition, working with senior government officials and suppliers to provide material support to rebel forces. He also developed and cultivated an advanced network of local activists to provide time-sensitive information to U.S. agencies. Because of his passion and participation in motorsports events, Austin serves as the regional director for Team Shelby, the social marketing arm of Shelby American. He also has earned his bachelor's degree from Texas A&M University and completed a master's at Kansas University. With that being said, I would like to go ahead and turn it over to Austin.
All right, thanks, Amanda. I appreciate that. I'm going to go ahead and share the screen for everyone. Okay. So, like any of these, the most exciting slide is up front, and it's the disclosures. And so what, when we talk about agriculture as an investment, we always got to talk about the risk. Investments in agriculture, like any other investments, are speculative in nature. If we talk about private placements, obviously those are liquid. And if you're thinking about investing in things like that, you got to play this smart. You got to not invest money that you need to withdraw in the near term. Agriculture, like anything, has its specific risk related to it. When you think about weather, infestations, disease, if there's something going on with the commodity prices, And then, of course, things in the global economy can affect that. I can tell you that I am not an investment advisor. I am not a broker dealer. And so everything I discussed today is not, we're not selling securities to you. We're not advertising a specific deal for you. This is just an educational webinar for you to understand kind of what we do as Harvest Returns and what's available for you out there for investments. All right. So if you think about what the current economic situation is, this is shows the volatility index, and you can see way back there in 2008, 2009, we had an interesting few years back then. And then if you fast travel all the way to 2020, you can see Corona Mountain there at 2020, showing what kind of volatility the market had over the last 7-8 months. So this is just a kind of a snapshot to show you what happens over time in the market. And here's another. This is your income market bonds at risk, and when you look at this and see kind of how interest rates up and down over the years, and that asterisk there on the side is something to kind of pay close attention to. An investment with a duration for 6 years could lose up to 6% if interest rates increase by 1%. And so we've all been keeping a close eye on that over the last decade or so as the interest rates dropped and the market's changing. So this is just kind of giving you a snapshot. Everyone's probably up to speed with what the world looks like today. So just kind of getting everybody on the same page. So in this day and age, alternatives are positioning as a great place to move money to, maybe out of the stock market or out of some other volatile areas and into something like alternatives. Alternatives are becoming increasingly popular. They provide a little bit more safe diversification for your portfolio. They're a hedge against market corrections that are happening. So there are all kinds of alternatives out there. And of course, what we are talking about today is land specifically for agriculture purposes. So why agriculture as an asset? So this graph will show you how it compares to the performance of other assets. If you're looking at the S&P 500, U.S. farmland has outpaced the S&P 500 for 40 plus years. And you can see some of the other assets there and how it compares to that. I'll talk here in a bit, in a couple of slides, about U.S. farmland and how we kind of envision that in our heads. Like most of us see it a certain way, but I'll talk about different aspects of it. But you can see how this compares and why. If you're on this webinar, you probably agree with this and why land and farmland is so important. So some key things to think about, which are always going to be true. The world population is always going up. The amount of land that's available to farm is decreasing, and there's never a better time to invest in something like agriculture than now. So regardless of what pandemic may approach or what world event may happen, people still need to eat, people still need to have clothing, and people will need shelter. That's the things, those requirements that every human's going to have, and that's not going to change. And so when looking for an alternative investment, agriculture just makes sense in that regard. All right, so I mentioned, I'll go back up at 2 slides, that U.S. farmland, that green bar that we talked about. So here is some examples of U.S. farmland. When we think about it, if you ask yourself, just close your eyes and like, okay, what does U.S. farmland mean? We all get that tractor combine image in our heads going through a nice cornfield in Iowa somewhere where the sun's going up. So there's obviously other areas where U.S. farmland is a good investment. When you think about livestock, whether it's a feed yard or a large rotational pasture regenerative cattle operation, obviously a good land investment. Timber, which has always been a great investment, especially long-term, is a different type of U.S. farmland. The specialty crops, if you think about orchards, pecans and cherries, well, those types of investments need a lot of capital up front and usually pay out high yields towards the end of the investment. It's a little bit different style than your row crops. And then there's the ever-growing indoor agriculture, which could be the large greenhouse like you see on the image here. Could be a commercial building in a downtown area where a producer is growing racks of strawberries or microgreens and selling them to local restaurants. So we'll always have that kind of image in our head of what we see as farmland, but we need to expand a little bit and understand that there's totally different ways of looking at it. So the trends in agriculture that we've seen and that others are seeing as well, more and more consumers are demanding specific things from their food. Organics is a very popular trend, and you can see some stats there for each of these bullets here. The precision ag, like I said, is the amount of land is decreasing. Producers are having to produce more product with less land, and so the one way to do that is to just increase your efficiencies and try to pull more out of that piece of dirt. And so that also puts a strain on that land if practices are not improved and the farmer or the rancher is not able to update their equipment. So that's a big trend we see in the ag community. And then, like, as I mentioned, the indoor ag, getting the produce closer to the people that are going to consume it. This cuts down on distribution problems. The obvious that we've noticed here in the last few months with the COVID outbreak, distribution and supply chains have had some troubles. While there's plenty of food out there on the ground, getting it to the markets can be troublesome. And so there are a lot of, as we've seen, talking with our sponsors and other partners, that there's an opportunity here, because when large centralized distribution chains are having troubles moving stuff across the country and interstate highways, restaurants, grocery stores, any other kind of consumer companies are looking for a supply that's closer to them and doesn't have that risk of being cut off from world events. And a number there that seems a little outrageous, but is actually right on par what we're saying, that venture capital funding going into ag has gone way up, and so there's obviously people paying a lot of attention to this. So now I'll talk to you a little bit about crowdfunding, just to kind of lay the foundation of what we're discussing. Crowdfunding is something that came into the United States around 2012, 2013. The Congress passed some legislation that allowed certain types of crowdfunding in the United States. And when you think about crowdfunding, the best way to kind of understand it is it's electronic syndication. It's the way that issuers are marketing their private placements, and they're doing it via a online platform. And so if I say platform or portal or site, I'm referring to a place that you would go on the internet to find private placements. So in the crowdfunding process, much like whether it's a real estate syndication or you're going to invest in a startup company, the process is pretty much very similar. The issuer and the investor, everyone's doing their own due diligence process, understanding what the risks are, what the risk and return profiles look like. Then you go into document preparation. You got to build that private placement memorandum and the subscription agreement, the share purchase agreements, all the legalese that you've got to get together to make sure everybody's covered. And then you go through the capital raise process, and in days before 2012, that might have been going door to door. That might have been picking up the phone. That might have been reaching out to family and friends. But you're somehow reaching folks that would be interested in investing a certain amount of money into a larger pool. And then once the capital raise process is successful and an offering is closed and an asset is purchased, then there's the asset management, and that's usually done by the issuer of the securities, or could be farmed out, pun intended, to an administrative service. And that is basically just handling your annual tax documents. It's handling any distributions that are happening, and also making decisions on for the benefit of the investors. So that's that's kind of the crowdfunding process in a very generalized description. And so from there, I'll tell you a little bit about what our company does. We apply that process to production agriculture and value-added processing. So there are plenty of platforms out there that are doing crowdfunding for startup companies, no matter what type. There's platforms that are open for real estate investment, whether multifamily, single family, commercial, you name it. There's a platform available for it. There's crowdfunding platforms out there for things like artwork and movies, and we've even seen some for a crowdfunding platform for hosting people's bail so that they can take care of legal issues. So it's a tool that is used, and so Harvest Returns takes that tool and applies it to ag production, and we've been doing so for the last almost 4 years now. And so what we look at specifically for our offerings, and this kind of applies to the audience here, is if you're specifically looking at agricultural land that has a product that's being produced, livestock, crop, et cetera, we're looking at what is that business? What are they doing? What are they providing to the market? And you can see those numbers there. That's kind of what we have found to be an underserved part of the market, that $500,000 to $3 million capital raise amounts. This is the type of farms and the level of management that they're not quite the industrial size farms, and they're larger than or like mine, grandparents' hobby farms. So these are businesses that are producing profits. Their business just happens to be one of the most important things on the planet. So once we identify these potential offerings, we're talking with the growers or the ranchers or the producers, and we want to see some that have some experience track record. We're very welcoming to those that are new to the business, and we usually encourage those folks, guys and gals both. Hey, if you don't have the experience, we would really like to see that you're bringing people onto the team that have that experience. And so we've a lot of the deals that we've already done have focused on the growers that have some kind of track record to show, to give that investor that comfortability that this is someone that knows how to grow something or raise something. We've also had an emphasis on sustainability. We are not interested in just pulling profits out of the dirt and destroying the earth. We do want to see that the practices are that the growers using is at least at the sustainable level, and we're definitely moving into the regenerative areas as well. And this obviously is for the benefit of everyone, not only just the business, but for the community as a whole. And so when you think about sustainability, whether it's, we usually think about like the earth itself and the minerals in the ground and things like that. But there's also other sustainability, like the economic sustainability. We want to make sure that they're, not going to go out of business, but also, bringing in jobs, building up some of their community, et cetera. And then the target annual returns, this is just kind of a range. We've seen offerings that are longer term, smaller IRRs, some that are short term, higher IRRs, different levels of risk, and we want to provide that large range to investors.
Hello, Austin.
Yes.
I think we lost audio for a second on that very last slide.
Okay. Yeah, I just was basically just handing it back over to you, Amanda.
Okay, thank you so much, Austin. I greatly appreciate it. And with that being said, we're now going to move into the Q&A section today's webinar. If you haven't already submitted your questions for Austin, please do so by entering your question in the Q&A box. As I mentioned earlier, there is an icon at the bottom of your screen that has a little Q&A bubble. And if you click on that, you'll be able to enter in your question. And we do have one question that has come in from one of our attendees, and they have asked, have you been invested with any beekeeping or honey producing operations?
Great question. I can tell you we have not invested in that so far, or had an offering on our platform. However, we have received some inquiries from operations like that. And so it typically comes down to the conversation we start with those operators, and just try to help them understand the requirements that we have to get them in front of investors, but also just to encourage them and help them with their business to get it properly set up for a private equity investment. So we are very interested in those type of operations, and so if those come along, we definitely want to have a conversation with those sponsors.
Wonderful, thank you. We do have another question that has come in from one of our attendees. They're asking, of the trends you shared, which do you see to be most investors moving towards?
Okay, I'll try to answer that best I can. What we have found, that doesn't mean it's a national trend by any means, but what we have found over the course of our time running this platform is we've had some great success in the grass-fed cattle industry. We've also had some great success in the more indoor ag offerings. But what I always share with the sponsors that are interested in raising capital and with investors that are looking for something, it really comes down to the math. And so if someone is interested in raising capital, we will work with them to tell their story and share, all of the components of their offering. But an investor is always going to be interested in how the money works out. How does the math play out with their investment? Are they going to be long-term or short-term? Is it a high risk, low risk? So the math has to make sense first. And so we've seen success, like I said, in those two areas, usually around, an offering that's no more than 3 to 5 years before exit.
Thank you. We do have a few more questions that have come in, and just want to mention again, if anybody has any other questions, feel free to type them into the Q&A box. As I mentioned, with our next question, one of our attendees are asking, have you noticed that your investment criteria doesn't have a geographical preference? Is that accurate?
Yes, that is accurate. I would say the majority of our offerings have been domestic in the United States, everywhere in the United States. We've also done some international deals in Central America, Western Africa, and we continue to get inquiries from all over the world. Obviously, the due diligence process for some of the international deals, especially when you're in an emerging market area, that can be challenging. And so we typically do the domestics, but we're not by any means against something international.
Wonderful, thank you. And then as for our next question, one of our attendees is asking, why are you convinced the population is going to increase? Currently, the trend in some countries are on the decrease.
Good question. Yes, there are, I think, especially in some parts of Europe that have decreasing populations, but taking as a whole, considering the emerging markets and places around the world that myself and our CEO has been to, the populations continue to grow. And just think about places like Brazil and India and China, countries that are still industrializing other parts of the world. So there will be more mouths to feed, and that's just what the data has shown us.
Thank you. As for our next question, is it possible you can be your own mortgage credit company to provide the money for the investor?
We have not looked into that aspect yet. We we kind of position ourselves to assist the farmer rancher in getting their offering in front of investors, as well as assisting the investors in finding deals, quality agriculture deals for them to diversify their portfolio in. But from as far as the credit facility for the investor side, we have not gone down that road yet.
Thank you. And then as for our next question, we had come in a little bit more of a timely topic. They're asking if you have seen COVID affecting business much at all.
I would say it's yes. And the impact as for our specific company is that our phone is ringing a lot more. Our email traffic is a lot more. And the reason that is because, as I mentioned in an earlier slide, that folks that took a big hit in the stock market, or, back, let's say March, April, they are looking for a place to put money for a period of time until this market kind of corrects itself. And so our phone started ringing a lot more about, hey, do you have something in this term and this risk level? And so I would say our business as a whole has picked up quite a bit as COVID rolled out. The sponsors that we worked with, their impacts have varied depending on what their actual crop is. The beef producers had a similar kind of experience where all of a sudden the folks that they were trying to, like a supermarket or something like that, they were trying to get on their shelves. All of a sudden the tables turn and that market is now reaching out to them going, can you provide me with supply? Because my national distributor is not working today because of something COVID related. So some sponsors have had some negative impacts just based on what their market's in, but for Harvest Returns, we've seen quite the uptick.
Wonderful. And then as for our next question, one of our attendees is asking, they participate in other non-ag private placements. They're asking, what is the best way to review active ag private placement opportunities of yours?
Oh, great question. Very easy. It's on our site, our platform. The best way to get into it, www.harvestreturns.com, and it will take you, as you navigate through there, you'll see how to sign up for our platform, basically an email and a password. And once you're inside there, you can kind of develop your profile, whether you're thinking about investing as an individual, as a trust, as an self-directed IRA. There's all kinds of options. And so you just kind of poke around in there and you'll see that while we're probably not at the complication level, you're going to see something similar like shopping on Amazon. You're going to see offerings of different crop types and risk return profiles. And if you like something, you start clicking and you dig around in there. And for sure, we're always available for questions. But yeah, the website is definitely the easiest way to get in there.
Wonderful. And I will also, after today's webinar, I see Austin has his contact information up there as well as the Harvest Returns website address. I will also be sending a follow-up email to everyone, Austin's contact info as well as the website address, so that be on a lookout for that. We do still have some time for a few more questions. We do have one that has come over and they're asking, what is the minimum investment?
Okay, great. We get that a lot. The minimum investment is deal specific. So we may have 2 or 3 different live offerings up at a time. And the minimum will depend on that particular offering. Also, the eligibility of who can invest may be specific to an offering. In some of our deals, you must be considered an accredited investor. And other deals, we can allow up to a limited number of unaccredited investors into those offerings. So long answer to a short question, the deals could range from a minimum of $5,000 up to say $25,000 for a minimum single investment.
Wonderful, thank you. And if anyone has any other questions, we have time for about 1 more or 2 more questions, but I just want to mention again, I will be sending out a follow-up email with all of Austin's contact information as well as the website address for Harvest Returns. And I will want to remind everyone that today's webinar has been recorded and we will make the recording available later today. I'll be sending an email within that same email. I'll let you all know when it has been posted on the site. And so just be on the lookout for that. And then Austin, we actually have one more question that has come over. And they're just asking, just to be clear, is Harvest Returns acting as the sponsor on each deal or just the platform administrator?
Great question. So easy answer is we're the platform administrator. We're basically the asset manager for each one of these deals. The sponsor, that term we use is that could be the owner operator of Blackberry Farms LLC. Just using as an example, that is the sponsor. We work with the sponsor to develop an offering that of the capital raise that he or she's trying to do. And so we administer the capital raise process on our platform, and then we're handling all of that paperwork and asset management for the pool of investors that are coming into our platform. So I hope that's clear.
Thank you. I don't see any additional questions that have come over. So I want to thank you again, Austin, for your time today to talk on this topic with our attendees. And as I mentioned, again, today's webinar has been recorded, and the recording should be made available a little bit later at the end of today. I will be sending out an email letting you all know when it is available, as well as Austin's contact info and the website to Harvest Returns. So also feel free to reach out to Austin as well directly with any questions for any additional information. And with that being said, thank you again, Austin, for your time. We greatly appreciate it. And I also want to thank you all to the attendees for attending today's webinar. Thank you.
Thanks so much, Amanda.
Thank you.